Welcome back to the Wall Street Podcast. Today we're doing a deep dive into a recent Morgan Stanley report. It's titled Tesla Inc. Elon's Comp Package, Hold My Honeydews, and it dropped on September 7th, 2025. It gives us an early, quite critical look at Elon Musk's proposed long-term compensation package. We'll be looking at what it means for his commitment to Tesla, those really aggressive targets, and, well, this huge vision for AI and robotics. That title, Hold My Honeydews, clearly a nod to the U.S. Open, right? Suggests something big is happening.
Exactly. And what's really interesting is how the package seems designed to address those lingering investor worries about Musk's focus, given all his other ventures, especially now with Tesla moving more into what they call dual-purpose AI, stuff with potential civilian and military uses. Musk apparently wants a blocking minority stake around 25% to sort of maintain control over big strategic decisions. So the report views this comp package as, well, cementing his long-term involvement, though it does point out there's no obvious succession plan right now.
And the targets themselves. Wow, they are definitely ambitious. We're talking 10-year goals like 20 million vehicles delivered, 10 million FSD subscriptions, that's the full self-driving, plus 1 million bots delivered and 1 million robotaxis operating.
And then there's the financial target, a $400 billion adjusted EBITDA. Morgan Stanley flags that as materially more aggressive than their own current forecasts. Achieving it would mean huge input from Optimus and these other AI robots that aren't even really in the projections yet.
Right. And the report really digs into this term bot. Tesla's definition is, well, pretty broad. It's basically any AI-powered physical product they make, except vehicles, but it includes Optimus.
That's key. It's not just about humanoid robots walking around. It could mean, as the report puts it, a wide range of robotic speciation. Arms, drones, maybe things we haven't even thought of. This suggests a market opportunity that, and this is a direct quote, could exceed the size of today's global labor market. That's huge.
It really is. Then there's talk about potentially combining Tesla and XAI, Musk's other AI company. It looks like a shareholder proposal is coming up for that. The report also notes Musk's strategy seems to be very much go it alone for advanced manufacturing in the U.S., physical AI, renewable energy, a kind of planetary species level focus, as they phrase it. It's a very grand scale. Okay, let's break some of this down. First module. Those operational milestones. Morgan Stanley's own base case, you said, doesn't really put a value on humanoids yet. So how do Tesla's specific targets for bots and robotaxis stack up against MS's own long view?
Well, it doesn't embed value is the term they use for humanoids. Basically, it's too early for them to model financially. Now, for robotaxis, Morgan Stanley does forecast about 1.4 million operating by fiscal 36, but Tesla's aiming for 1 million within this 10-year comp plan window. So even compared to MS's numbers, it highlights the massive, massive scaling needed. It's a very steep climb.
A steep climb, right. Okay. Module 2, that bot definition. What's the real significance of defining bot so broadly? How does that impact Tesla's potential market and maybe its valuation down the line?
It's potentially transformative. By defining bot this way, Tesla isn't just a car company anymore, not even just a humanoid company. They're positioning themselves to target this vast robophylum, as the report calls it, a whole kingdom of AI-powered physical things. The potential economic value, as we said, could eclipse the global labor market. So it fundamentally reframes Tesla's identity potentially towards being a leader in, well, generalized AI products. That changes everything for valuation.
Okay. Last module. Looking beyond the numbers, what are the big strategic takeaways here? What does this compensation package signal about Tesla's long-term direction and ultimately value for shareholders like you?
Strategically, the core idea is alignment. The package ties Musk's personal financial incentives directly to hitting specific operational goals, profitability targets, and market cap milestones. This gives minority shareholders clarity and, theoretically, aligns his interests directly with theirs. It reinforces his long-term commitment, yes, but it also acts as a powerful driver pushing Tesla's strategy squarely toward innovation in AI, robotics, advanced manufacturing, the areas where they see massive future growth. Growth that should benefit shareholders.
So thinking about the impact on you, the listener, this vision, driven partly by this huge comp package, suggests a future where maybe your commute is in an autonomous robotaxi, and maybe various bots, AI-powered devices handle tasks at work, maybe even at home. We could see really fundamental shifts in how you get around, how industries operate, maybe even the nature of daily chores. And that leads to our final thought. If this bot vision actually plays out, this vast expansion of AI into physical tasks everywhere, how do you think society adapts when automated labor becomes widespread? What new economic models, what new social structures might need to emerge? Something to consider.